All right. Good morning, everybody. So Powell yesterday was sitting in Congress and finally did what the market has been waiting for one of the Feds to do, make a statement with some sort of guidance, some reassurance that we're not going to have some hawkish Fed coming in and just stomping on the market with some sort of shock and awe. And he managed to do that yesterday. He reaffirmed their stance that a 25-point liftoff would be more than appropriate. And then he touched on the balance sheet reduction. The market really responded well. Um, it wasn't enough, didn't sustain. We got to see where it goes from there. But if you're trying to figure out, like, what the hell happened yesterday, that was it. The doves are flying back in again. It's like a wedding. Got white doves just flying around everywhere. Gotta love it. So we're looking at FX Street, and as you can see, there are a lot of economic events on the agenda today, including Fed being back in the hot seat. If you happened to watch some of it yesterday, they didn't finish whooping him, right? He's on the whipping post. He's got to go in and take the public flagellations. They got to spank him and degrade him and humiliate him, and they haven't finished doing that yet. So they're going to go in there, chipping their teeth some more, and give him a chance to give a bunch of non-answers. Keep in mind that at any time he can make a mistake and stick his foot in his mouth and really screws things up. Right? It's happened before. It'll happen again sooner or later. So don't ignore the news during this cycle, this time frame, while he's in there. The global system has finally found a way to apparently piss off Putin, and it came through the oligarchs and other rich people that are directly connected and associated with Russia. So instead of going after Putin's money, they've been able to go after his friends with money. And apparently that pissed him off because it raised his nuclear status for Russia, their global threat defense system. So things are getting a little touchy out there. Keep that in mind as well when we're looking at things on the economic calendar and kind of adjusting to what could or could not happen on the day. The conflict right now is the one thing that could take this market down. Not our market, but global markets, right? All markets. So just be very careful, very cautious in the trades that you are building, the time frames that you're holding them. Um, for those of you that are in the futures, there was an issue with Tradeovate yesterday where data just stopped. It's always good to have a backup plan, and I'm going to mention that I've mentioned it before. You need to have a phone number uh, on your phone, written on your desk somewhere that you can reach out and call your broker. And that's not just for futures. If you're day trading, you need this kind of backup. You want a number that you can call. You also want to use a stop, right? Because your stop is on the server, not on your machine. So if you were to, say, get disconnected from Tradeovate or any of the other brokers, because it happens to all brokers at some point, you could get disconnected from your broker. Your stop is still there. It's server side. That way, if the market does go against you, it kicks you out of your stop. It kicks you out of your trade. Right? This is like precautions 101. Please, please, please be careful when you're day trading. You could lose power. Your broker could lose power. There's so many different things that could go wrong. And you need to be able to reach out, touch somebody, and ask questions, get your trade shut down, exit everything. There was a time when it was Thinkorswim that was going down frequently, and then before that it was Webull, and there was Robinhood that had issues, and Ninjas had issues. It kind of goes in cycles, when a broker's trying to improve themselves, they'll go in and make updates to their platform, and sometimes they break it, and then they have to spend days or weeks trying to figure out what they broke and how to fix it, and it happens, right? So, it's not like, oh well, suddenly this one broker's a piece of junk. Nah, I mean they all have it from time to time. So, always be prepared for that, right? Don't be one of those stories that like, oh yeah, I was doing really good and then I blew up my account because I lost connection and the market dropped and I couldn't get out of my trade, and you just sound like a crying victim at that point. Whatever. You know it can happen. Prepare, be ready. This is the list. It's a very long list. I'm not even going to read through all the numbers. Every single hour on the hour from 8 o'clock all the way to lunchtime, we have economic events today. The additional auctions are very, very important. They're going to start at 11. So at 11 and 11:30, you're looking for a sea change within the marketplace. This would be like V bottom low, basing on the lows, basing on the highs. When you go back and like look at the QQQ, SPY, or say the ES and the Nasdaq, look at how many times we had a complete and utter shift in market sentiment right at 11 o'clock or right at 11:30. Now, in those candles, you wouldn't know if it was a day where we had these additional auctions or not, but very likely we did. And it's the reason I mention this all the time. It becomes a tradable opportunity. It also just becomes an opportunity to recognize a shift in market sentiment, right? And we want to catch that reversal. A lot of these economic events today are going to be a part of the decision process for March, right? They always want to talk about their dot plot, and they need to have something cement that they can point to and say, we're going to do whatever because of these economic data points that we picked up during this time frame, right? And so these are going to be the things that they're pointing at that point. On the on a couple of these numbers, there's the revisions have been absolutely insane lately. It's almost like they're cooking the books kind of thing, right? If you go back and look at what they're reporting and then look at how drastic the revision numbers are after the report when nobody's looking, they've been pretty extreme. So you can see a lot of manipulation going on in the last 2 months. Maybe it's just the same old manipulation that's always been there. I guess maybe it's just standing out a little bit more now than normal, right? But yeah, doesn't matter. The main thing to keep in mind is that there are economic events on the table today that can completely reshape this market. So do not be caught unawares. We're still in the range. When we closed Friday, way back here and way up there, that gave us this structure across the top. And we've managed to get through it a few times, but we've not yet managed to stay beyond it. Now, I'm a big fan of the concept that persistence beats resistance, and that if you keep kicking the door, you're going to make it through the other side of that door. Every time we visit this area, we gather more liquidity, but we also leave a volume footprint behind. So, at this point, there is no previous liquidity left from that area. We've already gone through there a few times, so we've absorbed all of that, but we are still continuing to leave that volume footprint. If we finally break through this level with conviction, it's going to be a mad dash towards the highs again. I wouldn't even try to nickel and dime this. It would be the round number, the 4,500, right? It wouldn't matter if it's kind of close. We're not even going to aim for kind of close. Just aim for the big roundy up there. I don't expect to see that without some sort of news. I don't expect that news to be coming in anytime soon. One of the news that would do that is some kind of ceasefire in in this crisis. That might do it, or the other side of this box, what would take us down to the bottom of this box? An escalation of the conflict, right? So you're looking at ceasefire would put us at around 4,500, and escalation of the conflict would put us back to around 42 half. And I would not even dismiss the idea that we could get back down to 41, depending on what the escalation happens to be. For just the economics that are on the table today, I don't think any of them individually have enough impact power to push us below 4250, right? On the positive side, we're we're flat on the morning after 12 hours of doing nothing. A 2% move, 2.5% move could get us up into that range, and we've got the ADR for that. 2.28. We have the capacity to move that far, but we've already burned 12 hours of the day. So while it could make that move, it would be very extreme looking, right? It wouldn't be sneaky or subtle or a soft, slow grind. It would be strapping onto a rocket ship. You're going to see the tape speed picking up, the advanced decline issues increasing. You'd see the fangs running. You'd have all the sectors in play. It would not be subtle, right? If you look at yesterday, these are the advanced issues for the S&P and the advanced issues for the Nasdaq. Well, this is the S&P and this one is the Nasdaq here in the middle. So we started down here, and you can look at just see all that cluster and lack of conviction in the advancing issues of the S&P, but we were still holding above 400, right, or around that 400 area. We kind of dipped below it a few times. So we're talking 400 out of 500 names. That's more than 75% of the S&P, but we just couldn't get much liftoff, right? The market couldn't get out of its own way. We had no conviction in there at all. And then finally, when Powell offered up that dovish bias again, we got that liftoff we were looking for. Remember, he's going to be chatting again today. So we're very likely to see the same kind of thing, a very high advanced decline line without a real good follow through. You see that really nice head and shoulders inverted on the Nasdaq there. That's pretty. Ain't it pretty? It did hit its target, by the way. You got to love it when the math works. Where are we going? All the way till we stop. That's where. So expect the same kind of thing today. It's worth taking a look at. In green, we're looking at volume. In blue, we're looking at time, right? So this is a TPO and this is a volume profile. I know they seem very, very similar. They look very similar, but they're measuring two different things. So volume by time and volume by price is a good way to think of it. We're inside the box. The box is a one standard deviation range, and we're very near the top of the box. It comes right back to that discussion that we were just having about breaking out of the top of that 4,000. Well, what we can see now that we couldn't see before is that there's very large resistance at around 44.25 right in there. Okay, so we weren't able to mark that on the other chart because we couldn't see this very large volume bar here. That's going to be a considerable area of concern. This profile here in blue shows that it's shallow and that we could move through there very easily. But the one in green is the more important one in this situation, right? Because we're talking about how much volume we had there, not how much time we spent there. Time by volume versus time by volume by time price. Yeah. So if we get above 44.25, expect some resistance. If we happen to get through that level, then we'll aim for 44.85.90 area, right? 44.85, 44.90 ish. Remember that when it comes to volume profiles, carrying forward yesterday's point of control, really useful. You don't have to go in and be a mad scientist with it. Just use your drawing tool, kind of eyeball it. That way you can plot yesterday's point of control into today's profile with the expectation that if we get there, there's very likely going to be some reaction. Well, we've already been there and we've already had the reaction. We've also got a cluster of point of controls here, right? And it starts to build up. We'll take a look at it, but I don't expect to see anything different in the Nasdaq. Got the same box, the same range, the same politics, the same everything at this moment. We're going to be waiting on Powell, and we're going to be very careful about the news coming out of Ukraine, and we're going to be looking for these economic numbers to come in that continue to confirm what the Fed has already been saying all along. So the range is clear. We're up near the top of that range. Persistence beats resistance. Bring it into the volume profile. We've got overhead resistance right around that 14,400 area. And then again around 14,600. So for the Nasdaq, it will be a fight all the way up. Should the market not like the news today, we're going to head back down with a vengeance. On the Nasdaq, at the very least, we are above that Friday close, right? When we're looking over here, it's the same thing we were looking at on the ES, that close from Friday. At least on the Nasdaq, we're above it. So we want to see this try to find support at that level. It doesn't, so far, it doesn't look like it. And the more times we cross through that level, the less respect it has and the less valid it becomes for any sort of support. Looking at things on the 15-minute, we're getting these lower highs and equal lows. So we're starting to wedge up. In the Nasdaq, we did get a few wicks lower, so the lower highs and lower lows, but for the most part, we're just wedging and building up a compression. Oil got a little out of control last night, got close to $18 to $17, but it did fade back off again. This the nerds are going nuts on this oil thing. Um, there's been talk for years that energy just doesn't have the impact in our marketplace that it used to, and everybody's kind of discounted how much energy affects us on a day-to-day basis within the sectors and different industries. And then this situation happens. And what they've been finding out is that there's just been a sleeping giant that kind of woke up. So definitely want to keep your eye on energy on a day-to-day basis right now. The way it's been impacting our market is not always subtle. Bitcoin finally started to calm down again. I'm not sure if that has anything to do with, you know, those that were sanctioned or those that were unable to get out of the ruble finally getting out of the ruble, or if they started to lose their connection with it, right? Because they're locking down social media and different areas. So, you know, access to digital systems, not sure. Just it has faded off. And I mean, if you were to ever go in and like study what capitulation and blow off tops look like, that was a pretty extreme move to the upside. One last ditch or one last hurrah before coming back down. And it was a significant burn to the downside very fast. But at least it started to stabilize. Same thing with gold. It's just stable, holding the range. You want to keep your eye on that. The move in bonds yesterday really stood out. You want to continue to watch this as pals in Congress. You remember when we're talking about bonds, it always leaves the door open for moves in the financial markets, right? So all of your XLF names are worth keeping an eye on. That's your opportunity for trades. And there've been some really significant issue on, on the energy side. If you go and look at metals and mining yesterday, well, not even yesterday, for the last week, it's been a phenomenal run to the upside. So again, there are plenty of names to trade, right? There's a lot of things out there that we can participate in. So through the day, continue to watch the market breadth. Remember, when we're talking about the market breadth, it's advancing versus declining issues. And when we're talking issues, what issues? Well, if you're looking at the S&P 500, say the SPY, issues are companies. So there's 500 issues, there's 500 companies. Why? Because there's 500 names in the S&P 500. How many of those companies are moving up? How many of those companies are moving down? We don't say companies, we say issues. So advancing issues, declining issues, advancing companies, declining companies. During the day, you can go to the Visualize tab, go to the heat map, choose your index. Which index? The S&P 100. How many names are in the S&P 100? 100 names. We don't call them names. We don't call them companies. We call them issues. And in this tab, in this area, as the day unfolds, you'll be able to see how many issues are moving up, how many are moving down, where's the money flow going, how many dollars are advancing versus how many dollars are declining, how much volume do you have advancing, how much volume do you have declining. And what you end up with during the day are these advancing issues in the Nasdaq and in the S&P. There are a lot more than this, right? A lot more than this. Because if on Thinkorswim, you want to go to indicators, these indicators. What are these indicators? Old school market breadth indicators. The New York Stock Exchange up volume minus down volume, or the NASDAQ 100 composite up volume minus down volume. These are market breadth indicators, very old school things, and yet very, very useful things. Tick, trend, AD, UVOL, DVOL, advanced decline. Make these something that you grasp and understand because they can give you a heads up to change your day, right? You see a breakout in the S&P at 10:45 in the morning when there should not be a breakout, and you can confirm that with an increase in advancing issues. You have a much greater understanding of what kind of day it is that you're looking at. Is that a sustainable move? Will it stick? It's always good to be able to look around and find those answers. Pair that with cumulative tick and then compare those cumulative ticks against each other. So you have cumulative tick comparison. Órale. I wrote articles on that. Okay, let's wrap it up. Looking at an iron condor on Google for the rest of the week. Got enough volatility in there that we are looking at around a $10 wide iron condor for about $5. So you're looking at around $500 for a day and a half. That's about the range or the ballpark on that. I was actually making it a little bit smaller since this wide of an iron wasn't quite pricing the way I wanted it. And I want it more delta neutral anyways, right? It put us around like that. The easiest way to do it is to look at the expected move. The expected move right now in Google for March 4, one day away, is basically $50. Well, it's this orange bar on my broker, makes things nice and easy. And I can just build the iron condor straddling the top side of that orange bar and straddling the bottom side of that orange bar, trying to aim for a little bit of a delta neutral. And you can see I'm not quite neutral, but I'm pretty darn close. This one's not balanced yet, but I'm looking for the market to open first and then maybe try to price this at around $5. Well, if I'm risking 5 to make 5, it's not a bad situation for an iron condor, right? Give you about a width of this. Now, when I start to zoom out a little bit, my broker, nice as it is, has these purple or hot pink lines, one here and one here, and then a different set of lines, one here and one here, right? That would put us at around 28.15 to the upside and 25.70 to the downside. That's a 2 standard deviation move and a 1 standard deviation move. And then you can see the very gentle bell curve here. And there's no real significant long tail to the upside or the downside. So that's the range we're looking to play. Oh, yeah. You like it. I'm also going to be checking out one on Amazon, but I don't think we're going to find as much love on that one as we got here. We'll see. So that broker, by the way, was Tasty Trades or Tasty Works. I use Thinkorswim for analysis, but I don't do much trading on Thinkorswim. They just don't do a very good job of showing me my positions the way I'd like. Plus, their commissions are just for options, not too bad. For futures, they suck. So we're looking at TradingView, where you've got the January listed liquidity, and as you can see, it's kind of mixed. It's all over the place. Those double and triple leveraged ETFs and ETNs have been great for day trading lately, but as usual, that's all they're really good for. So don't get stuck on them in swing trade. We had a nice rally up in Tesla. And what we want to see, and we're not seeing it at all yet, what we want to see is a run up in the pre-market to open up near the highs of yesterday. Right. And that, like I said, it's not what we have at the moment, but it's what we're going to be focusing on. Right. It's what we want to That's what we want to see for Tesla, because we want to see if we're going to get out of this range or not. We've been ping ponging in here just like we have everywhere else. High, low, high, low, high. So we want to see this either fail to break and we can play it back down a good $25 to $50 in the options. That's going to be a nice play. Or we finally break out of the top of this range with conviction and go for it. What I'm going to be focused on is a touch of the 483, looking for a touch and fail, or if it doesn't make it there or not, right? You could see how yesterday we didn't quite get to that previous day's high and it just gave up and dumped. So that's what we're going to be watching for today. Will we even make it up to that level before it dumps and tries to recalibrate, or is it going to make it up there and break it through? Just remember, Powell's going to be talking. It's going to be a lot of sidewaysness, and it just might not be worth the opportunity, even if you see the setup, right? So that's what I got, guys. Be careful, be safe. And when I throw on those condors, I will post them into the Discord.